box, in other words, any function, is increasing, then what? Box prime is greater than 0, right? You agree? I can just rewrite it instead of saying an f. It's like any function. I'm just trying to emphasize it's like any function, right? Okay? Now this is tricky. Somebody was tricky about this. So again, is f prime itself a function? Is the derivative itself a function? Yeah, right? Like, we started out with one function, we took a derivative, we got another function, right? That was still a function, right? Now I'm allowed to put in anything in here, right? Any function, right? So here's the trick. F prime is a function, so I can put that in there, right? And then I have to put it in here. But what is, oh, I'm sorry, I forgot to do one thing. I forgot to mention one concept. I should have mentioned this first, sorry. If this is f, what is f prime? 5x to the 4th, right? Now, this is still a function, right? So I can ask you what's the derivative of that, right? I mean, maybe it doesn't have any particular meaning, but we can still just take the derivative of that, right? So what is the derivative of that? 20x to the 3rd, right? And I can actually ask you what's the derivative of this? What's that? 60x squared, right? And we can keep going, right? So this one is called f double prime, and this one is called f triple prime. Okay? So we can do that, right? No problem. Okay, now sorry, going back to here. So this statement here is true for any f, right? So I emphasize that by putting box there. Okay, so I can put any f in there that I want. So I'm going to put in f prime into here because that's a function, right? And then I have to put it in here as well, right? But what does this mean? F prime prime means what? F double prime, right? So let's read what we have. F prime is increasing implies f double prime is greater than 0, right? Now combine that with this. So let's read it this way. Okay? Read it this way. You agree that I can get to this point, right? Okay, now let's read it this way. F double prime is greater than 0 means what? F prime is increasing. F prime is increasing means what? Concave up. So now we have a rule for when something is concave up. Here, when f double prime is greater than 0, it's concave up. Okay? So that was a little bit tricky, right? But it works, right? It's true. Okay, so when f double prime is greater than 0, concave up, and I think you can see the logic will work to show that when f prime is less than 0, it's concave down. So why did we care about concave up and concave down? Because we found that a function was flat here, and we found that it was flat here. We're not going to use the first derivative test, which was all of this stuff that we just talked about. Instead, what we're going to do is we're going to say, okay, I just want to know, here, is it concave up or concave down? If it's concave down, I know what? It's a local maximum. And if it's concave up, I know what? It's a local minimum. So that's an alternative to the first derivative test. Right? So what do? You find, this first step is the same. You find where it's flat. You find where the derivative is 0. But the second step is what? You don't check the derivative here to find out whether it's positive, negative, positive. Instead, you do what? You check just here, you check the second derivative here and the second derivative here. And that's an alternative to the first derivative test. Okay, so if you find that here, that what? What is it? If you find that the second derivative is positive, then you know it's concave up. Right? And if the second derivative, that means it looks like this, concave up. Right? And if you find the second derivative is negative, then you know it's concave down, looks like this. So one kind of confusing thing is, when the second derivative is positive, what does that mean? Concave up, right? Means it looks like this, which means it's a minimum. So that's a little bit like jarring, right? The second derivative, positive, means it's a minimum, right? But that's just the way it works out, right? Okay, so the second derivative is positive, following the steps. Okay, and the key thing that we did was, we had this observation from before, that when something is increasing, its derivative is positive. Right, when something is increasing, the derivative is positive. We had that, we wrote that down, and then we said, we mean for something, it can be anything. In particular, that's true even for the derivative. If the derivative is increasing, then the second derivative will be positive. And then the statements read backwards and forwards, hopefully. We actually have to prove all of that. But these statements read backwards and forwards, so we can say if the second derivative is positive, f prime is increasing means there's concave up, and that means in terms of this testing that it's a local minimum. Okay? So that's called, so the book has that, and you can also copy that. So that's the second derivative test. And in the process, we also talked about the concept of second derivatives, right? And third derivatives. And these are called higher order derivatives. First, second order, third order, fourth order, fifth order, sixth, right? Okay, higher order derivatives. By the way, if you start out with x squared, the derivative is what? 2x. The next derivative is what? 2. The next derivative is what? 0. The next derivative is what? 0. They're all 0 after that, right? Okay. Okay, any questions about that? Yeah.
You know the third derivative, by finding out the third derivative, what can we find? For the second one, we find that concave up and concave down.
Right. I mean, what kind of interpretation or usefulness does it have? So the second derivative has some interpretation here, like we just said, and it also has, like when you're talking about speed, that speed is the first derivative, and the second derivative is acceleration, right? Right. So the second derivative has some meaning in that problem, the problem of something moving, right? Now, how about the second derivative of a stock price? So what would that mean? What about the first derivative of stock price? I've never really thought about this. What does that mean? So let's say we're talking about the price over time. So what does the first derivative tell us? The rate of increase of the price over time, right? Right? The rate of increase, right? But what is that? Does that tell you anything? The rate of increase of a stock price. I don't know. I'm sure that somebody will use the velocity of the price to sound really fancy. Because the fancier you sound, the better job you'll get. And the higher your salary will be. Because you can confuse more people. And so I'm sure, let's see if I look it up. Let's see if there's such a thing as the velocity of price.
If somebody doesn't use that, then we should start. Velocity of money, there's something called velocity of money, that's different. Let's see this. Okay, there.
at least somebody has looked for it, velocity of price movement. Well, here's the velocity of the stock price. Let's see what this means, if anything. Price velocity is the speed at which price moves over time. So just what we said. Measured in cents per day, the speed at which price moves into a chart pattern often resumes after the breakout from the chart pattern. So this is how people get rich, by making up stuff. You can tell I'm really cynical. So, okay, let's see, what does this mean, anything? Price velocity. I looked at 16,000 stock market chart patterns. So there's something very popular in stock modeling, or figuring out what's going on, called charting. Charting. Which is probably a lot of BS, but maybe not. I don't know. Maybe there's something to it. I don't know. Market chart patterns of various types using daily price. So the price data from here, daily price data, right? The price every day, not the price every minute, right? The price every day, encompassing both bull and bear markets. I found the following. The price velocity leading to a chart pattern, I don't know what that means, often resumes after the breakout. Breakout probably means that suddenly, something, I guess it probably means that the price starts increasing a lot. Or breakout of a certain cycle, probably. Like maybe, that's probably what it means. So they say, I recognize there's a kind of up and down cycle to things, but suddenly there's some point at which, boom, you're going to make a lot of money. So we want to find that place, right? So he's trying to say, what is he saying? The price velocity leading to a chart pattern often resumes after the breakout. So maybe he's saying that, going like this or something, and then it breaks out, and then it resumes at a certain, I don't know. If price moved at a high velocity leading to the chart pattern, high velocity would resume after the breakout. I sort of understand what that's saying. Do you understand? Like, I don't know what they mean by the breakout, but he's saying that if before the breakout, I guess, if there was a high velocity in the price, then you can expect also after the breakout that there's a high velocity. But high velocity, does he mean positive velocity or any velocity? I'm not sure. Price drops further downward breakout after a high velocity run leading to the chart pattern, regardless of the market conditions. Upward breakouts from chart patterns perform better if velocity was, anyway, let's see, what does breakout mean? Let's call it stock chart. Let's first look up stock charting. It's a really big field. Or actually, it's a really big, a lot of people do this. Stockcharts.com. The charting tools and resources that you need to invest smarter. We make it easy to see what's really happening in the markets. So, you get these patterns, and you're supposed to somehow, charting is supposed to tell you about them.
You've got a problem. Your investments aren't growing as fast as you'd like.
Yeah.
So you did a smart thing. You opened an online brokerage account and started learning more about the financial markets. But now you have a bunch of new questions, like, which stocks should I buy? When should I buy them? When should I sell them? You tried watching the talking heads on the financial channels, but they just gave you untimely advice that the real pros already knew about.
This is a great advertising.
It's all starting to feel a bit too little, too late. But what if there was a way to know, to truly know, what the market was thinking?
Yeah, what if there was a way? Then you could be rich, but the thing is there's no way. But anyway.
How it was behaving, even before the...
So it's better, instead of doing this, if they were so sure about what they were doing, they wouldn't be advertising it. They'd be using it themselves. Right? They'd keep it a secret.
Pros. What if you could learn where the market was headed while there was still time to profit from that knowledge? With StockCharts.com, you can. Trusted by thousands of online investors, StockCharts.com has the charting tools and analysis resources you need to make smarter investing decisions.
So do they show us what you can do? Well, let's find like a Wikipedia or something. Investopedia. Here, this is a reliable site. They have a lot of so much good information, not just about stocks, but all kinds of statistics and stuff like that. Okay, so technical traders. So there's traders. They talk about technical traders versus people that sort of look at the stock, the company itself, and try and understand, is this a good company, and do they have good management and stuff like that. That's kind of understanding, but that's not a technical trader. Technical trader sort of just looks at sort of patterns and tries to figure out what's, patterns over time, and tries to deduce what's going to happen in the future. Okay, so technical traders use the price history of any stock and the price patterns that form as a basis for making trading decisions and analysis. This is called technical analysis, a technique that uses the price chart of an asset to determine, as a key to determine in forecasting where the price will go next. Price charts are highly visual, showing where a stock price has been in the past, the price's current trajectory, and how volatile the price movements are, and whether the stock has a lot or little interest in it. What can you learn from charts? Chart patterns are a field of study within the larger field of technical analysis. Chart patterns are geometric shapes created by the price movements of an asset. Okay, so that's that. Now how about, what was that thing called? Breakout. So we want to do, well, let's just do breakout. A breakout is a stock price moving outside a defined support. So support usually means like some kind of lower bound and upper bound. So this is Investopedia. Yeah, Investopedia is a good site. Breakout is used by active investors to take a position within a trend's early stages. So you somehow identify a trend, you think you identify a trend, and then you say, well, I see it's going up, so I should buy it now. Or I see it's going down, so I should sell it short. Right? Generally speaking, this strategy can be the starting point for major price moves, expansions in volatility, and when managed properly can offer limited downside risk. Throughout this article, we'll walk you through the anatomy of this trade and offer a few ideas to better manage this trade. Now, what is breakout? Breakout is a stock price moving outside its defined support or resistance level. So, it's like limited to here and here, and to get outside of there would be breaking out, and like the resistance is like, keeping it in there. Right? You can talk about like there's kind of a force keeping it in there. With increased volume. It's defined support or resistance level with increased volume. A breakout trader enters a long position, so long position means, I forget, and after the stock price breaks above resistance or enters a short period, okay, I don't know what that means, but I guess when it breaks out is like maybe you should buy or sell, or you should do something. And then you want to take advantage of the fact that it's going to be doing something unusual for a while or something like that. Okay? Once the stock trades beyond the price barrier, volatility tends to increase, and prices usually trend in the breakouts direction. The reason breakouts are such an important trading strategy is because these setups are the starting point for future volatility. Everybody know what volatility means? Volatility means a lot of change, like a lot of up and down, a lot of up and down. Could be, it's bouncing around a lot. Okay? So are the starting point for future volatility increases, I'm not sure that, large price swings, and in many circumstances, major price trends. Okay. So, I guess here's a picture, and this must be a breakout, right? Starting here. So there's something like that, I don't know. Okay, so you can read about this, but yeah, there might be a way to make money using that, I'm not sure. I tend to doubt it, but it's possible. Okay, anyway, so going back to our situation, you asked what was the third derivative, and we said, well, what about the second derivative? So this, or even the first derivative. So first derivative, when you're talking about a ball,